Every year, millions of British drivers open a renewal letter, sigh at a number that has crept up again for no reason they can see, and simply pay it, because arguing feels like more effort than it is worth. And every year, the insurance industry quietly banks billions of pounds on one simple fact, that you will not do the one thing that could cut that number in half. There is a rule, a completely legal one, that can dramatically lower what you pay to insure a car, and it works in a way so counterintuitive that most people never even think to try it, because it sounds like it should make things more expensive, not less. By the end of this video, you will know exactly what that rule is, precisely how to use it without breaking the law, the single dangerous mistake that turns this clever move into a criminal offence, and the stack of other legal tricks that, put together, can genuinely halve your premium. Because the insurance company is not hoping you watch this video, they are praying you never do. The whole business model of the renewal letter rests on a simple bet, that you are too busy, too tired, or too resigned to do anything but pay. Today, we are going to make sure that bet stops paying off, at least for you. Let me start with the number that shows you why they care so much. The average comprehensive car insurance premium in Britain now sits around £500 to £600, and for young drivers it is far worse, frequently £1,500 to £3,000 a year, sometimes more in the most expensive postcodes, where the same young person can pay almost double what they would in a quieter part of the country. On top of the premium itself sits insurance premium tax, a government levy of 12% added to every policy, which you pay without ever really noticing it. Insurance is one of the largest unavoidable costs of running a car, a legal requirement you cannot drive a single yard without, and the industry knows you have no choice but to buy it. It also knows something else, something worth more to them than any advertising campaign, that most people, worn down and busy and faced with a renewal that is only a little higher than last year, will simply accept whatever price lands on the mat rather than fight it. That inertia is worth a fortune. In fact, it became such a scandal that the regulator, the Financial Conduct Authority, had to step in a few years ago and ban the practice known as price walking, where insurers quietly charge their most loyal customers more and more each year while offering the cheapest deals only to newcomers. They banned it because the industry was doing it on an industrial scale, to millions of people, precisely because it worked. And even with that ban in place, the deeper truth remains. The insurance industry makes an enormous amount of its money from your ignorance and your tiredness, and the rule I am about to explain is one they would much rather you never discovered. Here is the first thing you need to understand, because insurance in Britain is priced in a way that feels almost designed to confuse you. Your premium is not really about you as a person, whatever it feels like. It is about risk calculated by a computer, and specifically the risk attached to the car and everyone who drives it. The insurer takes every factor it can find: your age, your postcode, your job, your car, your claims history, your annual mileage, where the car sleeps at night, how you pay, and blends them into a single number representing how likely they think it is that this particular car will cost them money over the next year. Some of those factors you cannot change. Your age ticks down slowly, your postcode is fixed unless you move house, and the raw statistics of who crashes are what they are, which is why a teenager in a city always starts from a brutal place. But a great many of the factors you absolutely can influence, more than most people ever realise, and the tragedy is that most people never touch a single one of them, accepting the first number as if it were the only number. And here is the crucial insight that unlocks everything, the thing the industry never puts in bold on the letter. Because the calculation is about the overall risk on the car, not just on you, you can change that number not only by changing yourself, but by changing who else is attached to the policy, and by controlling every one of the details you do have power over. The premium is not handed down from heaven, it is a sum, and you're allowed to influence the inputs. That is the door the rule walks through, and almost nobody thinks to open it because nobody ever told them it was there. I want to be transparent about how this was put together, because insurance is a field absolutely riddled with bad advice and outright scams. This is based on the premium data published by the Association of British Insurers, the price comparison data from the big comparison sites, who process millions of quotes a month and can see exactly how price moves with each factor, the guidance of the RAC and the independent consumer bodies, the rules laid down by the Financial Conduct Authority that govern how insurers are allowed to price and treat you, and the law itself, specifically the Fraud Act 2006, which matters enormously here, and which I am absolutely not going to let you fall foul of. I should say plainly, and I mean this, that I am not a financial advisor and this is general information rather than personal advice. So always get your own quotes and, if in doubt, proper advice for your own situation. But the rule is real, it is legal, and it is genuinely powerful. Let me tell you exactly what it is. The rule is this: add an experienced, low-risk driver to your policy as a named driver. That is it. It sounds mad, almost backwards, because every instinct you have screams that adding another human being to an insurance policy must cost more, not less. In the same way, adding a room to a house costs more to heat. But with insurance, it is often the exact opposite, and once you understand why, you understand how the whole thing is priced. Because your premium is based on the overall risk attached to the car, adding a safe, experienced driver with decades of claim-free history, a parent, an older partner, and someone with a spotless record, pulls the average risk on that car down. The computer looks at the car and sees that it is not only being driven by a nervous 19-year-old, but also by a 50-year-old with 30 years of clean, claim-free driving, and it decides the car is a little less likely to end up in a ditch or wrapped around a lamppost. And so, the price can fall, sometimes dramatically. For a young or high-risk driver, this single move can knock hundreds of pounds off the premium, with the RAC and the comparison sites reporting typical savings of £350 and often a great deal more. Add the right person, and you can watch the number drop by a fifth, a quarter, sometimes far more, for doing nothing but putting a safer name on the paperwork. There is one condition that matters, and I will keep saying it. The person you add must actually drive the car sometimes, genuinely, even if only occasionally. They cannot be a ghost, a name invented purely to lower the price, because that is both pointless and suspicious. But a parent who really does borrow the car now and then is exactly the kind of driver the insurer is happy to see on there. That is the rule. Now let me tell you how to use it without going to prison, because there is a version of this that will destroy you. Because here is the line you must never cross, and this is the single most important part of this entire video, so if you take nothing else away, take this. There is a legal version of this rule and an illegal version, and they can look almost identical on the form, a couple of names and a couple of boxes, but they could not be more different in the eyes of the law. The legal version is this: you, the young or main driver, remain listed as the main driver, the person who actually uses the car the most, and the experienced driver is added as an additional, named driver, who genuinely uses the car sometimes. That is honest, legal, and sensible. The illegal version, the one that ruins lives, is called fronting, and it happens when you flip that around and dishonestly name the experienced driver as the main driver of a car that is really driven mostly by the young or high-risk person, purely to get a cheaper price. That is not a clever trick. That is insurance fraud under the Fraud Act 2006, and the consequences are catastrophic. Let me spell them out, because people genuinely do not realize how serious this is until it is far too late. If you are caught fronting, and insurers are extremely good at catching it, using telematics data, mileage records, where the car is kept overnight, who was actually driving when a claim happens, and clever algorithms that instantly flag a 50-year-old suddenly insuring a hot hatchback with a teenager attached, and the car registered at the teenager's address, the insurer treats your policy as if it never existed. Not cancelled from today, void from the very beginning as though you were never insured for a single day. Every claim is refused. If you crashed, you pay for everything yourself, your own car, the other car, and any injuries to other people, which can run into hundreds of thousands of pounds and follow you for years. You're left retrospectively uninsured, which is itself a criminal offence carrying a fine and 6 penalty points, and can mean your car is seized. You can be prosecuted for fraud under the Fraud Act 2006, which means a criminal record that follows you into every job application and every visa form for the rest of your life, an unlimited fine, community service, and in the most serious cases a prison sentence of up to 10 years. And a fraud marker against your name makes future insurance monstrously expensive, if any company will cover you at all. The Association of British Insurers uncovers tens of thousands of these cases every year, part of over £1 billion of insurance fraud, and fronting is one of the things their investigators hunt hardest. Both the parent and the young driver can be prosecuted, so a mum or dad trying to help their child can end up with a criminal record of their own. The small saving is never ever worth it. So use the rule, the honest way, name the real main driver as the main driver, add the experienced driver as a genuine occasional named driver, and you keep every penny of the benefit with none of the risk. Lie about who really drives the car, and you are one accident away from losing everything you own. So before I give you the full stack of legal savings, I want to ask you something directly. And I read every reply. Tell me in the comments what your last renewal quote was, and whether it went up or down, because I have a horrible feeling this comment section is going to be a wall of numbers that went up for no reason at all. And tell me honestly, did you just pay it, or did you shop around and switch? No judgment at all, because most people just pay it, and that is exactly the habit the entire industry is quietly built on. If this video does nothing else, let it break that one habit for you, because that single change of behaviour, refusing to auto-renew, is worth more than almost anything else I can tell you. Now, the rule I have given you is the most powerful single move, and I want to be honest about who it helps most. It is most dramatic for young drivers and higher risk drivers, the people whose own risk is high enough that a calm, experienced name genuinely drags the average down. If you are already a 50-year-old with a spotless record and a full no-claims discount, adding another driver will do far less and might even nudge the price up, so always check the quote both ways. But for the people paying the eye-watering premiums, the young, the newly qualified, the recently convicted, this rule is close to essential, and it is not the only lever. Stacked together, the legal steps I'm about to give you can halve the premium of almost anyone, whatever their age. Move 1, and this is the big one for everybody regardless of age. Never, ever auto-renew. Your renewal quote is an offer, not a bill, and loyalty in insurance is quietly punished, not rewarded, whatever the adverts imply. Shop around every single year, run 2 or 3 of the comparison sites, and get a quote directly from a couple of the insurers that do not appear on them, because some of the biggest names deliberately stay off the comparison sites to hide from exactly this kind of shopping. The sweet spot for the cheapest price is around 3 weeks before your renewal date, not the day itself and certainly not after it has lapsed, because insurers price last-minute buyers as desperate and price the organised ones as low risk. Simply switching can save a long, loyal customer hundreds of pounds for an afternoon's effort. Move 2. Raise your voluntary excess, the amount you agree to pay towards any claim, because a higher excess lowers your premium, though only do this if you could genuinely afford to pay that excess after a crash, because there is no point saving £50 now to be unable to fix your car later. Move 3. Tell the truth about your mileage, but make sure it is accurate, because an enormous number of people wildly overestimate how far they actually drive, guessing at a big round number when a lower, honest annual mileage means a lower price. Move 4. Where you keep the car overnight matters more than people think, and a locked garage or a private driveway is rated far lower risk than a public street, worth another 5 to 15%, as long as it is genuinely true. Move 5. Describe your occupation as accurately as possible, because the exact wording of a job title can shift the price noticeably, but it must always be completely truthful, never massaged into something it is not. Move 6. Pay annually if you possibly can, because paying monthly is not a convenience, it is a loan, with interest often running to 20 or 30%, so spreading the cost quietly adds a small fortune over the year for the privilege of not paying up front. And move 7. Choose your car wisely in the first place, because a small car in a low insurance group, a Hyundai i10, a Volkswagen Polo, a Kia Picanto, costs a fraction of a powerful or desirable one to insure. And for a young driver, the choice of car is one of the single biggest levers of all. Here are the rules, pulled together into a checklist you can actually use this week. 1. Add a genuine, experienced, low-risk named driver, completely honestly, with yourself still listed as the real main driver, and check the quote with and without them to see the difference. because occasionally it does not help and it costs nothing to test. 2. Never auto-renew and requote every single year around 3 weeks before your renewal date across multiple comparison sites, plus the big insurers who hide from them. 3. Raise your excess if and only if you could afford to pay it. Keep your annual mileage honest but accurate rather than a lazy overestimate, and get the overnight parking and the occupation details exactly right. 4. Pay annually, not monthly, to dodge the hidden interest that can add 20 or 30%. 5. If you are a young or newer driver, seriously consider a telematics or black box policy, which prices you on how you actually drive, your speed, your braking, your nighttime miles, rather than simply on your age, and can reward a genuinely careful driver with hundreds of pounds off and lower renewals as your score builds. And 6. The golden rule that sits underneath every other one. Tell the absolute truth on every single question, because the honest driver who pulls all these levers pays less and sleeps easily, while the one who lies pays less. Right up until the exact moment they need to claim, and then discovers, at the worst possible moment, standing at the roadside, that they have no insurance at all. Now the arithmetic, because this is where it becomes real money in your pocket rather than theirs. Take a young driver facing a £2,000 premium, which is depressingly ordinary. Add an experienced parent as a genuine named driver, honestly, and that might come down by £400 or £500. Switch to a well-chosen telematics policy and drive carefully, and there is another few hundred off. Refuse to auto-renew and shop around properly across several sites 3 weeks before renewal, and there is more again. Pay annually rather than monthly and dodge a couple of £100 of hidden interest. Choose a sensible low-group car instead of something with a big engine. Keep the mileage honest and accurate, and piece by piece that £2,000 quote can genuinely become £1,000 or less. That is not a fantasy. That is just someone pulling every legal lever instead of none. And for an older driver sitting on a £500 or £600 renewal that has crept up for the 3rd year running, the single act of refusing to auto-renew and switching to a new insurer can lop off a third or a half in one afternoon at a laptop, because the loyalty you thought was being rewarded was quietly being taxed. None of it is a trick, none of it is a lie, and all of it is money the industry was quietly banking on you handing over without a fight. The difference between the person who does this and the person who does not is not luck or income. It is simply knowing, and now you know. So here is the bottom line. The rule that cuts your premium in half is not a loophole, and it is not a scam. It is simply understanding how insurance is actually priced, that it is about the risk on the whole car rather than some fixed fact about you, and then using that knowledge honestly and in your own favour instead of theirs. Add the safe driver the real way, with the true main driver named as the main driver. Never auto-renew. Pull every legal lever you have one after another and watch them add up. And never, ever cross the line into fronting or any other lie on the form, because the version of this that feels like getting away with something is the exact version that destroys you when you can least afford it. The insurance industry makes its fortune from millions of tired, decent people who open the letter, see a number, and just pay it, because that is easier than fighting. Every one of those payments is a small bet the industry placed on your inaction, and it wins that bet tens of millions of times a year. The moment you stop being one of those people, the moment you shop around, pull the levers, and refuse to simply pay what you're told, you quietly take that money back and put it where it belongs, which is in your pocket. They have been praying for years that you would never find out how it works. Now you have, and you can never unknow it. So open the letter, and this time, do not just pay. If this video saved you money, or is about to, subscribe so you never miss the next one, and send it to anyone who just paid their renewal without question, because they are the ones who need it most. That is all.